Good morning. I'm Carolyn Crockett, Senior Vice President and SBA Manager at Nevada State Bank. On behalf of NevadaSmallBusiness.com and Nevada State Bank, I'd like to welcome you to our webinar today, Fundamentals of SBA Lending. We'll talk about several key points today, including what you need to know before applying for an SBA loan, how to determine which SBA loan might best suit your particular business, and what you need to do before meeting with your banker or lending professional. We'll also discuss recent changes made to the SBA loan programs, as well as changes that are currently in the approval process, all part of the SBA's ongoing effort to streamline and approve their programs in order to become more efficient and provide assistance and much needed capital to our small businesses. I invite you all to submit questions to our panelists via Twitter using the hashtag NSBWebinar. We'll make every effort to answer all your questions during the course of today's event. Now I'd like to introduce our panel. Next to me is Mr. Ed Cadena. Ed is the Nevada District Director for the U.S. Small Business Administration. He oversees all Nevada operations and implements the SBA programs approved by Congress. Welcome, Ed.
Thank you.
Next to Ed is Paige Ziegler. We thought you would like some perspective from a small business owner such as yourself, so we've invited Paige to participate. She's the co-owner of Off the Wall Signs and Graphics, which has created many of the building wraps you see on some of the hotels and resorts located on our famous Las Vegas Strip. She's also created the drop behind us here today. Great job.
Thank you.
Because Paige has gone through the SBA loan process not once, but twice, we have invited her to share her experiences with us today. And last but not least, Mr. Evan Dickson. Evan is the Assistant Vice President and Business Development Officer for Nevada State Development Corporation, one of our local certified development companies, or CDC, as you may hear us refer to them throughout the course of this webinar. The CDCs participate with banks and the SBA to provide owner-occupied commercial real estate and equipment financing to small businesses.
Thank you,
Welcome,
Carolyn.
Evan.
Thank you.
Each of our panelists have a unique perspective on this very important subject, and I'm looking forward to hearing what you all have to say. So without further ado, let's get started. So Ed, if I may begin with you.
Absolutely.
So can you tell us what is an SBA loan, and how might that differ from, a traditional conventional loan?
Basically, SBA is strictly a loan enhancement program. From a simple point of view, if you remember when you were a kid and you wanted to get a car, and so you went to your friendly neighborhood bank, they said absolutely, as long as your dad co-signs on the loan. That's kind of what the SBA does. It's a guarantee to the bank, not to the borrower, and it's a risk mitigation tool to help the lender feel a little more comfortable working with a business that may have some marginal issues, but is still very sound. So it's strictly a loan enhancement program. SBA does not make loans, we just guarantee them.
So they don't make direct loans?
No, unless it's a disaster, but we're not going to talk about that today.
Okay.
Another thing on that too, it's to also assist small businesses in their growth, job creation. I mean, these are some of the things that we really look for from our point of view, is job creation and economic development through that process. So.
It's also utilized specifically to cash is king, cash flow is everything. So one of the things that SBA provides is longer terms than you would in a conventional point of view. Usually we can go up to 7 years on a line of credit or a commercial loan. That's up to the bank obviously, but that gives them more opportunity, because the longer the term, the smaller the payment, and so you have your cash flow, because cash flow is king. Remember, the SBA's guarantee is to help make the loan more doable, but it's never, we may even do a loan and guarantee a loan for lack of collateral, but we will never do a loan with lack of cash flow.
Understood. So what types of programs do we have under the SBA that are available to small businesses?
Well, there's a lot of them, but there's actually only two. So let's get down to it. It sounds like it's a lot, but we have one called the 7A program, and the 7A program can go up to $5 million, and up to $150,000 you can get an 85% guarantee. Anything above that, all the way to $5 million, is 75%. and that's your 7A. And under 7A, you have Patriot Express, SBA Express, and we'll go through those as as we're talking for the next hour. And then there's also 504. And 504, basically, I'll throw that over to Evan. He's probably forgotten more about it than I'll ever know because he works on it daily. And so it's a great program. The way I look at 504, it's a mortgage loan for commercial buildings and equipment.
Yeah, that's the program that we participate in as a CDC, or Certified Development Company. The basic structure behind the 504 is the bank comes in with a 50% first lien on the collateral. It's for owner-occupied commercial real estate and long-term capital equipment. Then through the 504 program in the SBA, we come in and do a second lien on the property or collateral for 40% loan to value. So it allows for a 90% financing, allowing a small business to keep a good portion of their working capital and still be able to expand and create jobs and economic development through the process.
So what might a small business expect on a conventional basis? What are the differences between what's a down payment, maybe?
Conventional basis, for the most part, looks on a loan-to-value situation between, say, 65% loan-to-value to usually a maximum of about 80%, where our program starts at 90% on the high side, and there's a couple of caveats that if it's a startup business, there's an additional 5% equity injection required. If it's also a new business, which is defined by less than 2 years in business, we require an additional 5% for that. So on the downside, it would be a 20% equity injection on behalf of the borrower, whereas on the high side, it would be a 10% equity injection versus a 65% loan to value on conventional to possibly 80.
And that can make a huge difference in your monthly payment.
It can make a huge difference in your cash flow too.
Yes,
I mean, the out of pocket for the small business. We realize small businesses, I mean, you're operating on cash flow and you need that cash flow to keep your business alive for working capital. And this allows you to keep a good portion of that working capital and still expand your business through acquisitions of commercial real estate, owner-occupied commercial real estate, and capital equipment.
And probably the biggest thing on that is it's long-term. It's a 20-year note for the 40%. And more importantly, the 40% is sold on a weekly basis in Wall Street. And so the debenture rate is usually lower. So when you mix the 50 and the 40, you have a below market interest rate. And it's, again, the key to anything that we're trying to do at SBA is increase cash flow so that you can keep investing in the business and grow your business. Everything that we try to do with the SBA, as do the banks, is try to get your business to grow and create. Let's face it, we're in business to make a profit. If you're making a profit, it's a business. If you're not, it's a hobby. So you need to figure out how to make that profit, and that's the cash flow basis. And that's the whole idea behind having the CDC and the bank, and that you get the below market interest rate, and it helps you reinvest. At all times, cash flow is to reinvest into your business to grow it.
And that's absolutely what's happened for us, because it's been instrumental in our growth, having that 504 loan for the equipment that we've gotten. And that's exactly what happened for us with the first loan. It allowed us to free up more cash flow so we could actually get the second flow and increase the amount of equipment that we had and continue to grow. And our payment with the 504 SBA loan was actually half of what it was going to be with a conventional loan that they were recommending through the equipment manufacturer, just because our down payment was significantly less and the interest rate was such a better deal for us. So it did allow the growth and allowing that cash flow to stay with the company to allow us to keep growing.
That's awesome.
That's great to hear. So with SBA, is there any restrictions, limitations? Can you tell us, are there any businesses that maybe can't get an SBA loan?
Well, there's eligibility requirements, and I can go over all of them, but one of the key things I'll throw out now and at the end, at www.sba.gov, go to finance, gives you all the eligibility. For the most part, the majority of all businesses are eligible. The things that aren't, not for profits, you know, basically we used to say if it has hoofs or it rolls, kind of get away from that. Also anything sexually prurient in nature we get away from. But for the most part, it's any business that's for profit. That's the key thing. It's for profit, and that you're selling a service or a business. and most importantly, that it's legal. Now in Nevada, we don't do anything with gambling, even though gambling is legal here, but that's just one of the rules that we have from a national basis because it's a national program.
So does it exclude gaming altogether?
No, not completely. It just you can't get the preponderance of your income from gambling. So, for example, if you're selling lottery tickets or you've got a couple of slot machines in your business, that would be okay. But that, for the most part, almost everything is eligible.
Okay.
And other restrictions is we usually, if it has hooves, we don't have anything to do with live animals. But business and industry and USDA will handle that all day long.
Right.
I mean, we run into it quite a bit from our perspective on the gaming because we do see some of the
taverns,
for instance. So if you have a third or more, you have to have a third, less than a third of your gross income has to be from gaming, and the rest of it has to be from
food and beverage.
Right, food and beverage and everything
Okay.
is pretty much the definition that we
Okay.
look for.
That's good to know. That's
You know,
good
one
to
other thing we might point out too is it is a loan. So it is underwritten as a loan program. I mean, I think it's not a grant situation. I mean, we do, from the bank's perspective and also from the CDC, Certified Development Company, perspective, we underwrite it as a loan. We're looking for the cash flow. We're looking for, positive cash flow and being able to pay the debt back. So that's kind of a misnomer. Sometimes we'll get contacted on and say, hey, is there this SBA money? And there is, but it is a loan. So we do look for that criteria.
Thanks for clarifying that.
Yeah, so.
It's kind of the concept, there's three things you're looking at. How much money do you need? What are you using it for? And more importantly, how you're going to pay it back. You're right, it is a loan. And that's very important, and that's why cash flow is king. Right. We're looking at how are you making a profit. As Paige mentioned, because she was able to get the longer payment schedule, she's got more money to invest in her business, and you've done it a couple of times, and it's growing, thank God, hopefully exponentially, we would hope. But you're doing very well. But that is the whole concept, is getting the cash back in your hands so that you can grow your business and you probably increased your market because you had ability to go out and produce more.
Absolutely. We actually tripled our revenues and net profits that first year after we got our first SBA 504 loan.
That is awesome. I'm sure your banker's glad to hear that too.
We're looking for the third.
So Evan, you must have worked with Paige during the process.
Yes, during both processes, so it was enjoyable.
So Paige, how did you hear about SBA? You mentioned that you got a 504 loan for your equipment purchase, and you talked about some vendor financing. So how did you come about, learning about SBA?
When my business partner and I were looking at getting additional equipment, we were researching it, and of course we're offered financing programs through the equipment manufacturers. And he had reached out to our banker, Melanie Maviglia, and it just started as a conversation. We didn't really know about the SBA program or those types of loans available. And through those conversations with her and all of the information that she was able to provide, we were able to obviously make a very informed decision and decide that that was the better program for us. And she guided us down that road and everything that we needed to be able to provide and put together to apply for that loan.
Good deal.
And that's probably one thing too that a lot of people don't realize is the 504 program. It's primarily used for owner-occupied commercial property purchases, but it is also, if that equipment has a 10-year life, we can put that equipment into that situation. So that's a real good example.
We talked about owner-occupied, so maybe can you define what do you consider owner-occupied? And can you have another tenant? Can you have a tenant in the building that's...
You can. If it's an existing building, we look at owner-occupied, or SBA defines owner-occupied as the operating company, the company that's qualifying for the loan must occupy 51% of the space. If it's ground-up construction, then they need to occupy 60%. So that's pretty much the definition that we go off of in that situation.
Okay, and you're allowed to lease out the remaining...
So you're allowed to lease out the remaining part. If it's a construction loan, we want to see 20% that you're leasing out. Yep, 40% available there to lease out. 20% wants to be on short, we want to see it on short term, less than 3 years, with the hope that you're going to move into that portion of it, and the other 20% could be on a little longer term, I think up to 10 years.
Carolyn, when you asked earlier what kind of loans you don't make, one of them is we're not into passive income. It has to be owner occupied, that you're actually doing a business, not that you're generating your income through rents or dividends, but that you're actually doing it through business and owner occupied. There's different types of lending for that, and it's not a small business administration loan that would cover that. And we also do a lot of exporting. And one thing I want to throw out there is that the future for the economy, 95% of all the economy in the world is outside the United States. So SBA does have a nice export program, and that's on www.sba.gov. You can find all that stuff. But those are the one thing that we really frown upon is it's ineligible. So it's, there's two things that for an SBA, you have to be eligible and you have to qualify. And part of the eligibility is you have to be current on your federal taxes, student loans, FHA, anything that has an alphabet soup of it, Fannie Mae, Freddie Mac, any of that stuff that's got government, and also any of your taxes. And being current on your taxes, you're current on your taxes even if you owe money to the IRS and you're on a plan. As long as you're current on that plan, you're current.
Okay. I think it's important, you mentioned we refer to those as investment properties, and SBA, which, Evan, you talked about some restrictions on SBA wanting you to occupy a certain percentage on construction and whatnot. That is because SBA does lend to small businesses and not the investor type transactions. So I think that's good to clarify. Let's see here. You talked about current on taxes and government, any kind of prior government debt. What about, with the situation, especially in Las Vegas today, would a short sale or a foreclosure affect being able to qualify for an SBA loan?
Well, it's yes and no. As far as SBA is concerned, it's not going to be an end-all, be-all. I guess at the end of the day, it's going to be up to the banker what their policies are. In Nevada, what I'm seeing with bankers, your bank included, thank God, you guys are looking at two different scenarios. You're looking at it, if you will, for lack of a better word, I'll call them good faith and bad faith. If you got stuck in the situation with the homes and your values went down, how you handle it is going to be very important to the banker. That not that you walked away from it, but that you figured out how you're going to handle it. So what I'm seeing with a lot of bankers is that there is a delineation. You're changing them. You're looking at what happened personally and then at the business. And if the business is cash flowing and the business is actually making money, that you can get it through your committee a lot easier if that happens. But if you can't, if the business itself is not cash flowing, then frankly the short sale and the foreclosure become irrelevant because you're not going to do the loan anyway. Right. But if you've straightened out your foreclosure and your short sale and you got that going and your business is going good, there's more likelihood that you're going to get it approved. Is it going to be approved all the time? Absolutely not, but that's going to be the key thing. And so there are two things which I'm glad to see that happening here because of the situation here in Nevada.
Yeah, it's interesting. We now have the term strategic foreclosures. Mm-hmm. So if we're in a situation where we're seeing multiple foreclosures during a period of time, or it's a situation where the ability was there, then, again, these are loans, so we're going to look at it from a lending standpoint and say, okay, what was behind this process? I mean, we've been able to do them. We've done a number of them, and I guess the answer is case by case. Mm-hmm. And that's the feedback that we're getting from SBA too, is they'll look at it on a case-by-case basis, which is pretty much how your bank's going to look at it.
Right.
Also, so I mean, there needs to be a detailed story behind the situation, and it needs to make sense. So, but it doesn't automatically eliminate the process. So.
And as a banker, I would agree. We look at them on a case-by-case basis. It's depending on the story. So. Okay, well, I think we've covered pretty much what an SBA loan is. What about, we talked a little bit about the 504 and 7A. Evan, can you maybe elaborate a little more on what type of equipment might fit in the 504, and then what might go in a 7A, Ed?
From our point of view on a 504, the equipment has to have at least a 10-year life. So we look for the longer, because our loan terms either run 10 or 20 years on our second lien on the properties. So that equipment has to have at least a 10-year life as defined by the manufacturers. So if it has that term, we like to, obviously we want to look at it for a 504 because our second lien on that property is a low fixed rate 10-year term if it's has a 10-year life on it. So like Paige was saying, it really can give you some benefits to stretch that out over that period of time. But the last thing we want to do is put you on a 10-year loan on a 7-year lifespan of equipment. So that's what we look for in the 504.
What about prepayment penalties? Are there any prepayment penalties on the loan?
We do. The 504 on our 40% portion has a half-life prepayment penalty. So if we do a 10-year loan, it has a 5-year prepayment penalty. If we do a 20-year term, it has a 10-year prepayment penalty. And that's something you want to talk to your CDC because they can kind of break it out for you and give you some ideas on what that might be. It's really not as dramatic in a lot of cases because we're only financing 40% of the project. So that prepayment penalty on our portion is only on the 40% that we're financing. So
I think that's a good point to make. I was just meeting with a client yesterday and we were going through the prepayment penalty scenarios, and her SBA debenture loan was around $100,000, that piece. But at the highest point, because the rates are so low and the prepayment penalty is figured on that note rate, in the 10th year, which would be, or the first year, which would be the 10% prepayment penalty, it was like $2,000. It was about a $2,000 prepayment penalty. So when you put it in perspective, it's not that dramatic.
It's not as dramatic, yeah. So.
And then because you have, banks don't want to hear this, but when you have the deal, you may not have a prepayment penalty on the 50%. So sometimes if you're trying to pay off your bank loan, first, and the bank, and if that'll free it up, you might be able to then when you pay it off, then you can go out and get you an SBA Express and get your line of credit. So keep using the bank's money. So
that's a good point. There is, I guess the SBA piece, which is the one Evan works on at the CDC, is pretty much set in stone, so to speak. The bank piece is negotiable as far as the terms.
Exactly, and that's why when you put them together, you always get a below market.
A blended situation.
So you remember with 504, you got 2 loans, one to the bank and one to the CDC.
Another thing too to bring up in that situation, I guess, or a point, is that most of this is for either owner-occupied commercial real estate or long-term capital equipment. So it's not the kind of situation where you're looking, okay, I'm going to hold this for 3 years and turn it. It's like, I'm going to grow my business. This is going to assist me in creating, my business growth. So it's usually more of a long-term situation that we're getting into.
But in the event, let's say that you needed a building right now, but you thought you were going to outgrow it within maybe 3 years, maybe a 7A loan would be better for the real estate purchase because the prepayment penalty is a little different on the 7A, correct?
Exactly, and the main thing with 7A and 504, 504 is for the longer, fixed asset, hard equipment. And 7A is kind of catches everything from expanding your business. You actually get a longer term on real estate. You get 25 years, but mainly that's rare. That's rare, but you can do that. You can also use it for inventory, payroll. One of the big things that we've been looking at with SBA is more of a line of credit. We have an SBA Express that goes up to $350,000. Some folks will come in and say, I need $1 million or I need $100,000, and you're sitting there, well, what do you need it for? And if it's for things that you're paying every month, you really don't need that much. What are you paying? Is it $25,000? Is it $30,000? So you may need a line of credit as opposed to a term loan. And those are the things that how do you find out which one you want to use? Well, there's a couple of things. I always say, go talk to your friendly neighborhood banker. You've got your banker, that's what they're your consultant as well as your banker. That's how you started, right? It was strictly a conversation. And if you're starting not knowing where you want to go, then you want to go talk to SCORE. We got 2 partners, SCORE, Small Business Development Centers. If you go to our website, they'll give you the names and address, where they're located. They have a bunch of classes, but you also get one-on-one discussion, because remember, when you're going to talk to Carolyn, if you tell her what you need and what you're using the money for, and you can't tell her how you pay it back, she's a great great person, but she's not going to be able to help you. But if you can give her all three of those things, I guarantee you she's going to help you. But you have to get that, so you need to either start with a banker or start with somebody that can help you. And as a small business, you're doing everything from being the janitor to fixing the air conditioning, that you need some assistance, and we do have counseling, and that's one of the big parts of SBA, not only access to capital, but having people that can talk to you as a small business and be your consultant, and that's free, gratis, and we have a very, very robust technical assistance group right here in Nevada.
You mentioned SCORE. For those of us that may not know what SCORE is, can you tell us a little bit about SCORE?
They're the Service Corps of Retired Executives. We're fortunate here in Nevada, we have the #1 SCORE council in the country for an office our size. We have 54 individuals, most of them were executives, very successful people that moved out to Las Vegas to retire. I guess they got enough of golfing, and so they come out and they share their wisdom. And that's basically the beauty of having such a big chapter. Is if you come in and you're talking about marketing, you may have somebody that worked for General Motors in the marketing department, or somebody that had their own company, or you can have, if you're talking about engineering, we have engineers that'll come in and talk to you about that specific business, because that's what they did for 30 or 40 years. And so that group is very robust. The other one is the Small Business Development Centers out of UNLV and out of the Urban Chamber. And what that group is they get a grant from the SBA, and they get a matching, and they're counselors that basically sit with you and talk to you about your dream. You know, what is it that you're trying to do? What is your business? And give you some insight on how to answer those 3 great questions that you need to have answered when you go talk to somebody like yourself, so that you can make a decision. Because remember, anytime you're talking to your friendly neighborhood banker, it's a business decision. That's what it is. It's strictly a business decision. And so you need to provide them with enough information so they can make that decision. And so preparation, prior planning prevents poor performance. You show up and you're prepared, your odds of getting a loan are exponentially higher. And that's the whole idea, is to be prepared when you walk in.
And the other thing is, these programs can be used in conjunction with each other.
Absolutely.
So you can have a 504 and also a 7A, depending on your needs. You can buy the building, move into the building and everything, and you may need some working capital through the 7A program. So they can be used in conjunction up to $5 million. So that's, Ed had mentioned earlier that the loan limit was $5 million. So there's some give and take there to use both products at the same time.
What about new businesses? You mentioned SCORE. I can imagine SCORE would be a great resource for someone wanting to start a new business. And what can they expect to be in store for at SCORE?
What happens if you're a startup, and by design, I used to be a bank regulator, so one of the things that banks are trying to look at is they're trying to make loans and mitigate their risk. They don't want to make a lot of bad loans. So what happens is when you're starting up, I eat a lot, so it doesn't mean I can run a restaurant. So the point really comes down to is, what kind of business is it? And we're looking at, on a startup, the things that you can get when you get to SCORE. They're going to tell you things like, who's your competition? Obviously, if you're going to open up a t-shirt shop right in front of a Walmart, your odds are going to be pretty slim that you're going to be able to compete. So those are the things. SCORE is going to talk to you about, what's your credit like? What have you done in the past? What kind of capacity do you have? Do you have the ability to run this? All of these questions that the banker's not really going to ask you up front, but that you're going to look at the numbers. And then, so when you go into SCORE, sometimes you don't get a yes, but you'll never get a no. You might get, you're not ready now, and this is what you need to do. And that's the beauty of having counselors, because they have no skin in the game. They're not on a commission. What they're trying to do is find out, Paige, what do you need? And maybe throw you some other information out that you may not be aware of. And it's that same conversation, whether you have it with SCORE or your banker. But what SCORE does, it gives you, you can get one-on-one, hour at a time, 2 hours, 3 hours. I've seen some of these folks come in for, frankly, a couple of years, and then they get ready. So the deal is, it kind of, SCORE provides classes, and they also give you one-on-one, and what you can expect is a lot of questions. And they're business questions. They're never personal questions. They're questions, where are you going to get your money? And sometimes in order to get to the bank, sometimes you need to go to what I call FF&E, family, friends, and enemies, to start, get enough money to get started. And then you can grow yourself into a banking situation. We have a thing called Where the Money coming out on Saturday at the Golden Nugget at 10 o'clock in the morning, that basically is going to show people everything from non-traditional micro lenders to all our friendly neighborhood banks. So to a couple of equity capital folks. So, you know, we push things 5 million and below, but the majority of the people that are looking for loans are looking for loans under 50,000. And that may not be something that the banks want to do, but we have micro lenders out there. So what SCORE does is they'll sit with you to figure out what your business is going to be, and also where you should go to try to either get your loan or your financing. And it may not be a financial institution. Mm-hmm. So the whole beauty of SCORE and SBDC is to find out what is it that you need. And on a startup situation, it's very hard to get lending on a startup situation unless you have a lot of experience. And for obvious reasons, because the risk is real high. But there's other ways to finance that. And that's what SCORE does, is they kind of go through and help you make your business plan make sense. And a lot of times, I'll be honest, I've seen these, they put the business plan and will say, Carolyn, that didn't look right. And so then you go back and say, I'm going to change it. And then so when they do go into business, they have really looked at what they're doing. Because at the end of the day, we don't want anybody going into a business if everything shows that it's not going to be successful. Because sometimes no is the best answer. So
we talk a lot, your office here, you were in Las Vegas.
Yes.
Do you have representation in the north as well? We've been referring a lot to Las Vegas, but we also represent the whole state of Nevada. So I know, Evan, your company has an office in Reno.
Right, we have one here and also in Reno. We serve the entire state of Nevada. We also do bordering counties in California and in Arizona.
Okay.
We have an office, a branch office up in Reno. We have 2 SBA employees, David Leonard and Judith Hepburn. They're awesome. You give them a call. Their phone number's on SBA.gov. We have CDCs, SBDCs, and SCORE up there. They're very active. Everything's available statewide. We have runners that go out if we have different areas, Pahrump, Ely, where we have SBDCs, and we have folks that can help you. The biggest thing that we enjoy is that we have a very robust web page so that you can contact people. And what we found out is there's a lot of tutorials, and believe it or not, most of our tutorials are taken after 10 o'clock at night, which tells me is that people worked all day, and then
they're working all night.
And they're working all night, you know, and women are the fastest growing small business owners. And what I've heard from them is they put the kids to sleep, then they can work on starting their business. So the net's available 24/7, and believe it or not, SCORE also has counselors available pretty much 24/7, and so on the net, so you can chat. So those are the new tools that are out there. So from the state of Nevada and the national basis, it's a really, really good program because you can talk to somebody. And what SCORE always tries to do is get the expert in the field that you're in, that they've gone through. What I find cool is that you have new business and then people that have gone through it and how they're kind of mixing using technology, but the business fundamentals never change.
Good point. So we've talked, Paige, I'd like to ask you some questions. You know, there's some, I believe, misnomers, rumors, call them what you will, about the SBA, the process. It's a lot of paperwork. It takes forever. Can you tell us what your experience was? What did you expect to take to the bank, and what did they require from you to get the loan?
I had no idea what to expect the first time around, so I definitely had a lot of direction from our banker, from Melanie, and then also when Evan got involved, he was a great resource for us in terms of providing financials. So we had to, you know, provide our balance sheet, our profit and loss, understand our business plan and provide projections, and those were things that we didn't necessarily have, all together when we first started this process. And I think, if you had a list of everything, that might seem a little overwhelming at first, but I think if you have those conversations and those great resources around you and you utilize those, it definitely makes it more manageable and easier to digest in certain pieces to get everything to the bank. So I think our first loan process happened over the course of at least a couple of months, and I don't feel like that was anything on the Nevada State Bank or the SBA or the CDC side, but it was us understanding our business more and how this was going to fit and how to pitch it and understand how it was going to work in the whole process and put that down on paper. So when we did it the second time around, I feel like we were able to get everything done in about a month because we really understood the process. We understood exactly how it was going to fit there, how to verbalize and vocalize that, but then also put it in a business plan and get those projections over as well. So the second time around was definitely a little bit easier, but the resources are there to get everything together, and it just might take a little bit more time the first time around, as you're understanding how to make it work for your business. But I heard those things too. The people that we were buying the equipment from were like, oh, you're getting an SBA loan, it's going to take such a long time. And so I think it was great to be able to come back with them in such a short turnaround and change their expectation of the program.
Yeah.
Well, one thing that I would like to mention also is there's two types of lenders out there. There's preferred lenders like Nevada State Bank, and what that means is that the SBA has enough confidence in the bank. Remember, the banks are our distribution system. So we have non-preferred and preferred lenders, and preferred lenders can do everything from nuts to bolts on the loan. They approve it, they send it in, and if you bring them a complete package, they can turn it. The key word is complete packages. That's what took you the first time 2 months, and the second time then you realize because they need certain information. All the information that they're asking for, going back to my regulatory days, are things that are required, and it's very basic information. Where's your money coming from? What's your business? What's your profit? And it also makes you as a lender, as a borrower, put things together and figure out what path or trajectory you're going to go to. And that's why you got another loan. You're saying, you know what, I can do this. So.
Good. You mentioned, I'm sorry, Evan.
I was just going to say one other point if I could. I mean, one thing we look at is working hand in hand with the bank and the customer to make the process as simple as possible. I mean, we want to see initially, the financials of the business and all that, but then there are some forms involved. Right?
Yes.
But we want to make that process as simple as possible. So we want, it's nice to work hand in hand with the banker as the CDC representative and the client and say, okay, here's what we need. Here's where we can help you. Here's what we can,
Because a lot of that can be going on simultaneously, the approval.
Yeah.
The bank approves the credit, they can be working with the CDC, and then it's just a matter of filling out the forms,
correct,
the required forms. Now, Paige, you mentioned that in the beginning with the first loan, you had to prepare some financial projections and whatnot. What resources did you use? Did you do that on your own? Did you go to a resource? Who did you turn to?
The first time around, we definitely utilized our accountant. So we used QuickBooks. So it wasn't anything outside of QuickBooks and those types of reports that we had to get. But our accountant definitely helped us put that information together and put it into the terms that they were looking for. And in terms of the paperwork, I think that the bank and Evan provided a lot of direction and hand-holding, if you will, the first time around to make that process a lot less overwhelming. And they did a great job of coming to us during our business hours, and meeting us halfway to help make all of that happen.
Okay, so we talked about everything, what the loans are about, and once you apply, what happens from there. Starts with the borrower. I think, Evan, you mentioned it, complete package. We've heard that. Checklist, you've probably received lots of checklists from the lender and the SBA. Let's see, any other thoughts on the process, Evan, that you'd like to add as far as what someone can expect?
I guess one thing that the more complete package we start with, the quicker the process is going to be. So a lot of times, the initial small businesses, you're focused on running your business, which is what your job is. Your job is to run your business. I mean, if you're an existing business, you already have financials. You already have tax returns and everything. How complete they are, you know, sometimes they need to be a little more complete than what we're seeing. But if you can put that together and get with your banker, or, you know, and say, here's what we're looking at doing. We have a plan. Here's what we want to do. Then it makes it easier to take it to the next step. I mean, the forms that are required for the most part are formality. I mean, they are required. They give additional information, but it's not something that really to be overwhelmed, would you say?
No.
I mean, really, we can get through that process. The most important part is it is a loan, so we are looking at the ability to repay the loan. So those financials are probably the key point, but as a small business owner, you have them. I mean, you know what your goals are, you know where your projection, you know what you plan on doing. I mean, you have these visions, and a lot of times it's just putting it down and getting it out there. So.
And there's a difference between a startup and the existing, because
Correct.
you know, the startup, you're doing projections. So as a banker or a SCORE or SBDC, they're going to look and make sure that it's industry norms. And then if you're existing, obviously we're going to, you know, some of the questions that we ask, you know, very simple. We have a form called a 912. I know people don't want to hear about forms, but one of the questions we ask is, one of the parts of credit is character. And when you're looking at character, well, are you a convicted felon? Have you been charged with something? What we're trying to do is take a look and see what type of person is coming in. And so that's part of, we required an SBA, but frankly, when I was with the FDIC, that was part of the truth in lending rules, that you should be knowing who you're lending to. Just because you may have stumbled and had one of those issues, if you've taken care of the issue, we just want to look at, because what happens a lot of times, somebody will say, won't let us know that they did something, then we find out, then you become ineligible. That's a character issue, because, well, you didn't tell us the truth to start with on your form, and usually at that point, you're not going to be eligible. So the point is when you're asked these questions, most of them are to figure out whether, you know, you have the capacity, what your credit is, how your character is. Then we go into the cash and collateral side, because what we're trying to do, the most important thing in lending, as any of the lenders will tell you, it's a relationship. They want to know who you are, what you are, and where you're going, and part of that is character. So some of those forms may seem intrusive, but they really aren't, because they're giving the lender insight on, because remember, they're partnering with you. When they lend you the money, and you're going to be with you for 5 to 10 years, they need to make sure that you fit with their bank, and vice versa, because it is a relationship. Always remember, everything that you do with your banker is relationship based.
Absolutely. And you know, when we think about it, when you break it down quite simply, we lend to people, and you establish these relationships. So I think that we're ready for our first question. Possibly. Okay, our first question came in. Can I refi my bank loan with an SBA loan?
The answer,
that is a great question.
The answer is yes. Okay.
Under what circumstances?
We look at, for example, if you have a balloon loan, because all of SBA's loans amortize. We don't do 2 years with a balloon. We believe that cash is king. You got to amortize it. That's why you give you more terms. But if the SBA loan is going to create additional cash flow to help the business grow, you can do that all day. Or if the terms are unreasonable or unseasonable, we can do that. But you can't refi an SBA loan with an SBA loan, because we assume that the loans and the terms are reasonable, or we wouldn't be out here. So yes, you can. So
if a business, for example, had on the 7A side, let's speak to the 7A program, if a small business has a line of credit perhaps at another bank and wanted to term it out or extend the terms, or just debt consolidation even, that's possible to do under the 7A.
Absolutely.
What about commercial real estate?
The 504 program, over the last 2 years, they had a period of time when you could do refinancing under the 504 program. It lasted about 2 years. It expired in September of last year, that particular program. It was a temporary program set up because of basically the economic situations. So it allowed, some of the businesses that had loans where they were coming due because of some of the values had decreased and everything. They could not go conventional anymore. So it was a very worthwhile program because it gave these companies and these small businesses an out in those situations. Unfortunately, as I said, it did expire in September. During the program was in place for a little less than 2 years. I think, what was it, 18 months or something?
Yeah.
So during that period of time, there's one article I read, there was 2,700 loans refinanced across the country for $7 billion. So is it a needed program? Yes. Currently there's a bill in the Senate and a bill in Congress where they're looking to renew the program, extend it. I think it's, 5-year term on both of them they're looking to kick it out for, which would be, I think, obviously in my opinion, it would be very advantageous for a lot of these businesses because we're still in a situation where these property values haven't gotten to the point where these people can go conventional in a lot of cases. So a bank may be holding a note at 90% loan to value, which in order to go conventional, that business owner has to come in with some substantial cash. But if we can look at it, if they renew the program, we can look at it on an SBA 504 program, then it would allow them to keep their cash, refinance, get longer terms, and put them into a situation where they can survive. So,
as I understand it, the refi program helped SBA achieve one of the greatest years in the history of the program, the last 2 years.
The last 2 years. Unfortunately, I wish I could say that it was the boon for Nevada, but we are moving up in Nevada. But for the nation, it's worked tremendously. And I know with Evan and the Nevada State CDC, you guys did a lot of them. You had a lot of folks, and that was, it's very useful because the last thing you want to see is, because you have businesses come in, they spend $1 million on a piece of property, now it's worth $500,000. But the business is still good. So the anchor that's killing them is that debt. So it allows the borrower to mitigate some of that to keep the business going. Because remember, the whole purpose of the refi is to keep the businesses operating and keep people working and keep people paying their loons back.
Well, let's hope it comes back. So, Ed,
I'm
can you lobby for
us? I can't lobby, educate.
Our next question, a hot topic we see on the news is sequestration. Will that affect anybody's ability to get an SBA loan, in your opinion?
Well, our administrator was here last week, and that question was asked to her, and Karen Mills was of the opinion that no, it's not going to affect SBA. We do loan guarantees, so as far as the loan amount, we don't foresee there being any kind of hit as far as loans are. We're at the end of the day, making loans, because they're not grants, and they actually generate income. If we can continue to do that, we should have no problems through sequestration.
Okay. Another question that's come in, you mentioned the flagship program of 7A, and there's some spin-off programs underneath that, SBA Express and Patriot Express. Can you talk a little bit about Patriot Express, which was established for the veterans, and what is the percentage of ownership needed by veterans to qualify for Patriot Express?
Well, Patriot Express is a program, it's like SBA Express. There's two programs. SBA Express is basically a 50% guaranteed line of credit. And what it is, you can use it for operational payroll, what have you. Patriot Express is the same thing, except it goes up to $500,000, and the guarantee can go up to 85%. But the difference is the amount of guarantee, and what we're trying to do at the SBA is to provide additional enhancement so that we can help our veterans get loans. The problem that happens is a lot of them are coming in and they're fresh right out of the war zone, and so in order to get a loan, they're going to need more of a guarantee. And so that program, I hope they enhance it even more, but that program is available, and it's basically, remember, you still have to qualify for the loan. You have to be eligible and you have to qualify. And you have to be at least, I think it's 51%, and you can be a spouse or a child.
Of a veteran?
Of a veteran.
Okay.
Especially if it's a deceased veteran.
Okay. All right, next question. Can you get a loan if you are leasing office space for your business, or is it better to get a line of credit?
A loan for what? I guess would be, they don't do it fine.
It doesn't specify, but I think if we could talk maybe to both, obviously if they're leasing space, they may be looking to purchase real estate, or if you're just leasing and maybe need some working capital, operating capital, or some equipment.
From our point of view on the 504, if you're leasing a space and you want equipment, yes, or in that situation we can participate. If you're leasing a space and you want to expand or buy your own space, yes. And that, I'll bring up one point on that too. We were talking about cash flow and everything earlier. If you're currently leasing, we add that lease payment back in when we do the cash flow on the purchase of your new property. So we've seen numerous situations over the course of the last couple of years, especially where property values, I mean, we're kind of in a perfect storm. Property values are low, interest rates are low, so it creates a huge opportunity for small businesses to take advantage of that situation. And possibly, we've had situations where somebody's paying $3,000 in rent, and now all of a sudden they've been able to buy and they're paying $2,000. So we've actually been able to increase their cash flow in that process. So if you're leasing and you're looking to buy, yes.
That's probably a result of the perfect storm, low real estate values, low interest rates.
Right.
So that's a good opportunity.
And also with 7A, you can do the same thing. At the end of the day, it's going to be, does your cash flow support the loan? Whether you're leasing or not becomes irrelevant. It becomes whether or not your ability to repay is there. And cash flow, cash is king. I've said it a million times. I'll say it a million times more. It's if I go in and see my family neighborhood banker, he or she's going to ask me, well, where's the cash coming from? And that's the whole deal. So leasing becomes irrelevant. It's a good time, literally, to talk to somebody like Evan to see if it can help you, like it helped you guys increase your cash flow.
Okay. Next question. What if I don't have a banker? Do I just walk into a branch, or do I ask for someone special?
It's perfect for you, Karen.
So I guess, of course, at Nevada State Bank, we offer SBA loans, and you could walk into any branch and say, I want to talk to your SBA specialist. Absolutely. Of course, Evan is also available if it's real estate related, and the first thing the CDC is going to ask you is, where do you bank? And if that banker participates in the SBA programs, they're going to refer you back to your bank. The SBA office, of course, is also a great resource to go into the SBA office, which is located downtown, if you aren't ready to talk to a banker yet and just want to get some general information.
And that's why you have SCORE in the SBDCs, because you may not be ready for a banker. Not everybody's ready to go to the banker. And so you might need a micro lender, you might need an alternative lender. And at the end, the goal for everything that we're doing is try to make you bankable. Our hope is that you come in, even if you're starting very small at $1,000 to $5,000, to eventually be able to walk in and talk to Carolyn and ask her for $1 million loan or a $500,000 loan. But so the deal is, if you don't have a banker, let's find out, do you need, quote unquote, a banker to get a loan, or what kind of banking services do you need? Do you need merchant services and all that other stuff? So if you're not sure where to go, that's why the SBDCs and SCORE are there. Talk to them. They will let you know primarily who in your area might be able to help you. Obviously, and especially if you don't have a banker, is find out what kind of banker do you need. And that's what, and as far as SBA or SCORE is concerned, we love all bankers. They're our distribution network. But we got to figure out what is it that you as a borrower need, more importantly. And they may not be a bank, it might be a micro lender.
And I think the key there is to reach out to somebody.
Right.
Somebody.
Reach out to somebody and say, hey, where do I go? I mean, we're gonna steer you in the direction that, hopefully fits best for your situation.
Absolutely.
So. Okay. Next question. Can an SBA loan be used to buy ranch equipment? are there special programs for rural areas?
Well, absolutely. As a matter of fact, it's a 504 program. I was talking to Evan about this right before we got onto this webinar. I come out of New Mexico, and one thing that I remember more than anything else is the dairy industry exploded. And then we realized that 80 to 90% of all the dairy equipment was 504. And so, yes, you can. We're probably not gonna buy cows' hooves or because we don't know what to do with them. But we will do the equipment, and it is long-term equipment. You know, that stuff lasts 20 years. So yes, you can.
Okay.
We also have a Rural Lender Advantage program that's out there to help the rural communities, and it's available to do things for ranchers or for agribusiness.
Okay. Well, I think that was our final question. One last thing I'd like to talk about before we wrap it up, the changes to the SBA program. You know, SBA is constantly evolving and trying to make the programs and the process more streamlined and efficient. So what are the recent changes that happened in the SBA programs?
I would say the big one from our point of view as a CDC was when the size standards increased. The size standards increased to where basically a definition of a small business is somebody that has a tangible net worth of less than $15 million and average net income over the last 2 years of less than $5 million. That was increased, what, 2 years ago, I think, right. 2 or 3 years ago? Mm-hmm. And when they did that, they also increased the total loan amount outstanding with SBA to the $5 million. That allowed us to play in a bigger sandbox. So there's more companies that meet the definition of small business.
Exactly, and then we've gotten away from revenues, and we're now, you know, again, you know, we've heard this through the political arm, everybody talking about jobs. We're looking at not just revenues, but for example, if you're manufacturing, we consider anybody manufacturing 500 employees or less a small business. We'd love to have some of those 500 and less manufacturing companies here in Nevada. But that's a thing that has changed tremendously. And the other thing is, working with our bankers, is we are trying to do everything electronically so that we give more authority to our lender, so that when you go to Carolyn and they go through the process, that they can get that thing approved quickly. So that's a big change.
What about the upcoming changes? There's some buzz about some things that are out for comment now that will even further expand that sandbox. What's going on with that?
You want to talk about 504?
Well, from a 504 perspective, I mean, a couple of the things, there's some requirements as far as liquidity of some of the partners we've seen some deals where you can't have liquidity over a certain amount or it needs to be injected in the project. And sometimes you'll see a situation where you may have 5 partners, each with 20% ownership, but one of them is very liquid. Even though he doesn't have a lot of input into the business, he originally set up the capital, and sometimes that can kick it out. So that's on the board, and one of the things is elimination of that liquidity. Also, when we look at the size standards, we look at the overall picture of all affiliates, and they're looking to expand that definition of affiliation. Right now, if you own 20% or more of a business, we want to look at that, or have control of 20% or more of the business. We want to look at that business also when we're putting together those size standards, and there's some talk that might go to 50%, which would allow, you know, us to keep that sandbox bigger. So.
Yeah, we're looking forward to that. So unfortunately, I think we're almost out of time. So any final thoughts, advice, words of wisdom from any of you? Paige?
I think it was really instrumental in allowing us to grow. So I'd encourage any business owners looking to purchase new equipment or real estate to talk with someone and start a conversation and consider this as an avenue to grow your business.
Great. Ed?
Paige, you're the reason I do this business. Is whenever I do anything with any of the bankers and the small businesses, I love watching people have a dream and turn it into a business and not a hobby. And kudos to you. We're available. There's resources, SBA.gov. Make sure that you go out there, take a look, and find out, get that conversation. Evan, you're right. Get the conversation started. And if we can get that conversation started, we can help you reach your dream.
Evan?
I would just say that, you know, it's a pleasure to see companies like Page's where they've done multiple SBA loans and they've grown, and it's fun to see them come back and see the differences and everything. I mean, it's exciting. I mean, what you guys do is exciting. It's fun to see that. I would like to say thank you to Nevada State Bank for giving us this format and to hopefully share this information. So.
And we hope to give you another award this year for being one of the top SBA lenders.
We hope so too. So thank you to our panelists. That was great information. On behalf of NevadaSmallBusiness.com and Nevada State Bank, I'd like to express our thanks for taking time out of your very busy schedules to share your insights with us. And thanks to all of you who've submitted questions via Twitter. If you'd like to see the webinar again or invite others to see it, a recorded version will be available within 48 hours on NevadaSmallBusiness.com. The next Insights webinar will be in May and will provide valuable information on how to make your business more efficient. I encourage you to register today at nsbank.com/webinar to find out how to streamline your business processes and organize your company. It should be great information, so don't forget to register today, and as always, registration is free. Thanks again for joining us today. I'm Carolyn Crockett. Have a great day.